What's going on, guys? In today's video I'm going to be going over a super simple ICT New York trading strategy for the NAS100 and SPX500. Let's get started. So some simple trading rules we're going to be going over. The trading hours, so we want to trade between 9:30 a.m. till 3 p.m. New York time. So how this strategy essentially works is we wait for a sweep of the daily high. So the first thing we can see on the daily time frame, so this strategy actually works based on the daily time frame and the 4-hour time frame. So you can base your bias off of either one of them. So in this case, we are going to be doing it on the daily time frame, and the first thing we can see is the sweep of this high right here. This high was swept. Now we don't just trade, or we don't take a trade just because a high got swept. Now the reason this is high probability is because we also have a fair value gap on the daily time frame. So as we guys can see, I'm going to mark out this fair value gap right here. So we swept the daily high and we tapped into a fair value gap, which indicates to us as a trader that the market is likely to go below this low as this high has been taken out. So the next candle open should indicate to us, or even within this daily time frame candle, we should go below this low right here. So once we've identified this, what we do is we drop down to the 15-minute time frame or the 5-minute time frame, and once we drop down to these time frames, we wait for a market structure shift and a fair value gap before entering these trades. Now the market structure shift and the fair value gap should essentially occur at the trading hours of 9:30 a.m. and 3 p.m. New York time. So I've created a small diagram here, and what we can see is, I'm going to mark the hours out for you. So say for example, this is our 9:30 a.m. open and this is our close. So our open and our close. So what we can see right here is the fair value gap being filled. So right here, this is our fair value gap. I'm just going to mark it out. Now this part, I'm going to circle it for you and show you what this represents. So this part that I just circled right here represents all of this. So it represents this fair value gap being tapped into and price going right back down. Now what we're waiting for is the actual retracement on the 15-minute time frame before we take our trade entry. So what we wait for, it is already 9:30 a.m. So what we're waiting for is price to simply go ahead and retrace into a 15-minute fair value gap. So say for example, we have a 15-minute fair value gap right here. This is the daily fair value gap. So we're going to cross this out and I'm going to draw another box around here. This represents our 15-minute box, and we tap into a fair value gap. Our stops will be at this high right here, so up here, and our take profit, we will be targeting all the way down to this low down here, and this would give you a 1-to-9 risk to reward. Now of course this is just a diagram. I'll be going over a live example in just a second of the NAS100 chart to give you a better understanding on how to actually trade this strategy and how to actually secure 1 to 2, 1 to 3s, so on and so forth, and also a risk management plan. Now just before we move on and go over the actual chart example, here are some of the results of our trading bot that has passed multiple funded account challenges. Right here, one of our clients passed his FTMO 100k account on the 13th of November, and if we click right here, you guys can see that it is verified on FTMO's website. He passed his account on the 13th of November. Now heading back on, you guys can see another client made $2,000 on his account, and this is a 100k FTMO challenge. Here's a 200k account that got passed in 10 days. The profit target was $10,000. So you guys can go check us out down in the description. I've linked it down below. So if you're interested in getting access to our AI trading bot, it's all linked down below. Now let's move over to the live chart example for NAS100. So the first thing we can spot is a fair value gap that got created right here. So the fair value gap on the daily time frame. Now, in order for this trade to be valid, we need this high, this daily high, to be swept. So I'll mark out this fair value gap in just a second, but before I do, let's actually mark out this daily high. So this daily high right here needs to be taken out. So we're waiting for this daily high to be taken. So I'm going to drop down to the 4-hour time frame and wait for this fair value gap, not this fair value gap, this daily time frame to be taken out. So just a second. I'm gonna go up to the daily time frame. So you can see that this daily time frame, this high has been taken. Now that the high has been taken, we drop down to the 15-minute time frame. Now once we drop down to the 15-minute time frame, we want to mark out, I'm going to replay this so we can mark out the actual hours. So we go ahead and mark out 9:30 a.m. open, which is right here. And make sure you're set on the New York time frame. And we mark out 3 p.m., which is 15. And now what we're waiting for is a tap into this fair value gap right here. So we've already had our market structure shift right here, indicating to us that the market is in a downtrend, and what we're going to do is set our limit orders right now. So our short position at the start of this fair value gap, and if this high gets invalidated, this trade will obviously hit stop loss, and we can target a simple 1 to 2 down here. But as this is a high probability trade, I will probably be targeting a different low, something like this, and let's see how this plays out. So our first indication, you guys can see large voluminous candles go right into this fair value gap and it taps right in, which is a good sign for us already. And yeah, we're consolidating. And if we actually go down to the 5 minutes time frame, we can get a better image. You guys can see it taps back into another fair value gap. I'm going to speed it up. And just like that, as you guys can see, we did hit take profit, and this would have been a 1 to 3 risk to reward trade. If you have any questions for me in regard to this strategy, please leave a comment down below. If you'd like me to backtest this strategy on a live account, let me know down below and I'll make a further video in regards to it. Hope you enjoyed this video, and I'll see you in the next one.